Okay. All right. So basically what I'll be talking about tonight is just treating a little uh issues we might be facing with um understanding technical analysis, right? So I'll be choosing here the JPY, which was right, which was the trade I spotted and I dropped on the channel, not the group. So um yeah, so here's the JPY. Okay. Right, this is where I do my markups. You can see everything all checked up. So what I'll be doing now is I would be going to a clean chart, all right? Okay, so let me go to Wanda. Right, yeah. So this is a clean chart, and we want to see how this has played out. Okay, but before I proceed with that, this was the trade I called. I dropped all this on the channel and of course on the group. So if you've been following, then you would have seen this. But if not, this is just how it played out. You can see this screenshot was taken September 8th at 8:54, right? And the next one was where it got triggered. You can see we had about 7 pips stop loss with a total of about 120, 130 pips TP having a 1 to 13x reward thereabout. And you can see how it sniped our entry. Okay, right? This was we're looking for price close of this candle, then we're looking for price to retrace to this level. And basically why I chose this upper level was because of scaling down to lower time frame, so which is all things we're going to talk about later today. All right, so this was the premium entry right there, the one at the top, and that was the snipe. Okay, and this was September 9th. The first one was September 8th. This September 9th. The next day at 9 a.m. Right, and this is when it smashed TP. You can see it smashed TP, and we had a snipe from the TP. So basically, what we do is we work with precision, right? We want to know exactly where we're taking our trades from and where we are exiting our trades. All right, so you can see how precise this was. Okay, you can see the entry very precise right there. This is September 9. Okay, then this is September 15. All right. Someone is asking on the group, has it started yet? Are you for real? This September 15. And this was when the TP got sniped. Snipe of the entry and the snipe of TP. So you gonna be precise of your entries and your exits, right? So let's dive into that quickly. So I have actually dropped this on the YouTube channel. So if you want to follow up with this whole series, basically it's more like a series on USDJPY. I dropped about 2 videos on the channel. Sorry, I dropped about 2 videos on the channel, and you can always go to the YouTube channel. Just search the Pip Cartel, THE_Pip Cartel on YouTube. Then you see the videos there. So and you can as well look for the channel in the description from the Telegram channel. You can look for the YouTube channel from the Telegram channel or the Telegram group. So the link to the YouTube channel is also on the Telegram group and Telegram channel. All right. So this is USDJPY. We had this entry from here. You can see we started from the daily time frame. All right. This is from the daily time frame, and we even go as high as the weekly time frame to see basically the bias. Right. So now why we're doing this basically is from the weekly time frame, even possibly from the monthly time frame. We want to see what's general view of the market, right? So and from the monthly time frame right here, all you just need to know, you're not trading off the monthly, of course. I'm not a position trader, so I don't trade off the monthly, but you want to use the monthly to know directional bias and what next is going to be possible move for the next month and of course next week, and breaking down to the days. All right, so now you can see we're coming off this demand zone right here. All right, and we'll have the bullish candles, three consecutive bullish monthly candles, and we have price currently in the range. So basically, this looks like it's bullish, right? Right, it's like bullish, and based on structure from right here we have uh okay. So from based on structure, right, we haven't broken structure right here. So these are most recent lower low, I mean lower high, lower low, lower high, lower low, and the higher low. So now we haven't created the lower low, all right, then it's possible we look at price, I mean the upside, but then we haven't broken structure yet. So price basically is trapped around our resistance zone. That's all we want to check for the monthly time frame, then bringing it down to the weekly time frame. You can see this one we marked out there. All right, this was the most recent. We have a lower low, we have a lower high. So this should be the most recent one now. So we're going to pick in this as our most recent structure level. So if price breaks above this high with a lot of efforts, of course, and we should look at price uh, continue to go bullish, right? So, but currently we are in this range, and you can see from last week's candle, we had this nice bullish candle with a lot of wicks to the downside. You can see a lot of wicks to the downside, and when you have stuff like this, it's showing rejections from those zones. All right, seeing a lot of rejections, and most likely, most times, price is gonna break through and continue towards that direction the wicks is facing. All right, you can see this is spin bars to the upside, and yeah. But then that doesn't mean price can still come further down before it finally head up. All right, so that is why we're scaling it down gradually. So breaking it down to the daily time frame now. Okay, this was the most recent high that we had. Okay, from this rally. Right, we broke structure right here. Why this high and price started. And this was where I started creating the series on USDJPY from the YouTube channel I was talking about. So you can always go and check that out on YouTube, and you see the videos right there. So this was the high. Then we created lower low, lower high, lower low right there, lower high, lower low, and we have the higher high right there. So I talked about this as well. That we basically broke structure right here. So you need to understand market structure for you to even be able to do anything in the forex market or any price chart, either crypto, stocks, whatever. You need to understand market structure, because that is what's that's like going to give you the directional bias of what's really going on in the market. And after this break of structure right here, we failed to break this low. All right, you can see we haven't broken this low, and still we haven't broken this high yet, but we've broken this one. So basically, we are looking at price to most likely start creating coming into a uptrend, right, from this downtrend. So basically this just looks like deal of this move right here. A deal of this move right here is just like basically a retracement, all right, for this where's my arrow? Okay, so for this move right here, so we have all these retracement, and basically if you understand liquidity pool and wipe of course you would know this is more like a reaccumulation schematic for me right here. So moving on, right, moving on, we really want to see what's happened right here and how we took advantage of this, right? You can see um towards basically scaling into the lower time frame. All right, so let's go to 4 hours. Okay. right? So now looking at the 4 hours time frame, you can see our price started coming and creating these lows. And basically, I marked out this institutional account right here some weeks back, right? And we said price is going to trade into this candle and see rejection from there. So we took, um, I think we took this short down here and we took this long. I can't remember. I think if we took this short, well, I know we took this long from here and we exited. We exited at this drop this drop right here from our supply base. All right. So that gave us an entry. Like basically your exits for your long entries are your entry for your short entries. I hope someone got that. Like when you exit your long entry, now you took this long right here, like trading the institutional way, okay? You took this long right here and you exited at this supply base. Basically, your entry, that entry is going to give you, I mean, that exit, right? You exited here, that exit is going to give you an entry for short, all right? So that basically gave us the entry right there. And that was how we took advantage of that. And now we just don't want to place the trade based on that alone, right? We want to get more confirmations, and that was why we had this right there. That was why we had this entry because if we're going to be taking off our trades that level, then we'll have a lot of a big stop loss, and that's not what we do. Basically, we want to have the best stop loss possible, and that was how we saw. Most people, or most times when you're learning trading at the beginning, you are told that you should run from run from choppy markets, right? If you agree with me, if you've heard that a lot of time, let me know on the chat box. Drop a two on the chat box if you've heard that before. Maybe don't trade the choppy markets or the ranging markets or stuff like that. Basically, let me know. Just drop a two on the chat box so I will know you guys are with me. All right. So yeah. So yeah. Now that is basically the retail mindset, right? You need to understand that in trading there's it's not just we retail traders like myself and you were all retail traders, but then you, we you can trade the institutional way and you're still actually a retail trader. So having that retail mindset will make you think that, oh, this is what they said and let's just follow it. But then you need to understand that there's some people behind these whole markets, which are the institutions, which is the central banks, basically, right? Those are the movers of the market. So if you understand their moves, basically they leave footprints behind. All you just need to do is tap into that footprint that was left behind and take advantage of it. All right. So now, choppy market is not for you to run away from. It's for you to study it and see where the breakout is really going to occur from. See where the shakeout, okay, the shakeout and the breakout is going to occur from. So have the shakeout. Basically, the shakeout is taking out retail traders, and the breakout is, the resulting trend, right? So that is how we had this. And now, when we got to our zone, we highlighted the zone. Now we're breaking it, we're scaling down to the lower time frame to see how we can catch our entry. And that was how I spotted this guy. Right, you can see this is our accumulation schematic. Right, here we have the selling climax here, and accumulation basically. We have a buying climax as well. Automatic rally to test, sign of weakness, uptrust, and initially I thought this was the UTAD right here, and I was thinking we're gonna have a LPSY. The LPSY or test, yeah, basically LPSY from this candle right here, but then it created another high, just basically to kick out every person trying to short the trade. And after that, we had a beautiful institutional candle that gave us the entry. Okay, so even if so, that's just basically what these guys they do. They accumulate orders and create liquidity, and retail traders sell off and long off those liquidities, while the institutions basically trigger the stops from the liquidity and take the market to the next direction. And I used to say this countless times that most times you probably you're on a long trade, you took a long entry, right? Probably from a support, and you're writing the trade, you're a little profit, maybe 10, 15 pips profit, and the next thing price kicks you out from that trade, go straight to your stop loss, and after kicking you out from your stop loss, after triggering your stop loss, it goes back into your direction. I'm very sure you have encountered that countless times, and that's basically the concept of institutional order flow, all right, and that's basically how the market moves. So after taking out the liquidity, there's nothing left to do than price to move to the next direction, and just like as we have right here. So you need to know how to spot these liquidity levels, how to take advantage of them, and price is going to go straight into those levels. And you can see we expected out this liquidity down here after we add this entry. So all you need to just do now is trade towards these liquidity zones are like the magnets, right? You trade towards the magnets, and price is going to go towards that level. All right, you can see afterwards, and yeah, as the price came into this, give us the retracement to give us the LP as Y, plus off to our take profit. So um so that was the zone basically, and I'll just go straight down to 1 minute, I mean 1 hour, sorry, 1 hour time frame, and we spotted out our zone. Price came into the zone already. I can see this was the institutional account that probably that faked out a lot of people, and it triggered, gave them that rejection. They finally gave us that final shakeout. All right. Okay. So and after the shakeout, we already know took our trade, our entry from that level. So I also highlight, also love to highlight this part. Okay. So I want to highlight this place as well, and let's see how that really played out on the lower time frames. Let's check 50 minutes. Right. So after price came into our zone, you can see this is like nice and easy, man. Because as I said earlier, there's always gonna be footprints left behind. So you can see our beautiful institutional candle right there. Our beautiful institutional candle right there, and that was the entry, and that was the stop just above. And just to be on the safer side, basically because of the spread and the likes, you can put the stop above this eye, and that was the snipe. I can see that would have given us a beautiful, beautiful ride to the downside. Let me bring this up again. Okay, so right there. Okay, we stop just 3.4 pips, and our TP right there is now, along the way we always take partial. TP1 should be around our liquidity that we marked out earlier. This is 15 minutes. Let me just go for 5 minutes. Okay, so our TP1 is going to be right at this liquidity we marked out right here. I can see that was 71, 75 pips. We did 1 to 22 with reward, and the final TP was the one we took down here. Okay, with 1 to 125 pips down here. You can see 1 to 109.125 with the TP, right? You see, we marked out that even at the beginning, right? And you can see how it played out then. So 105, 109.125, 125 thereabouts is TP2, and this is a 1 to 20, 36. 37 risk to reward, basically. And from there, if you smart enough, you could probably have seen it. And the long entry right here. Okay, so the long entry was actually 1 hour time frame. And so after this TP, I personally didn't take the long from here, but then we took another long entry from right here. So you can see again, we have run of our liquidity zone. Um, so you can see the run of liquidity right there after mitigating off our TPs right down here. And of course, there's always going to be footprints left behind, which the institutional can do right there. You can see price came back into that candle. So if we bring this down to the 15 minutes time frame again, all right? The 15 minutes, yeah, 15 minutes, of course. Yeah. You can see this candle right here was the candle, the snipe all the way up, and that was a massive run. Did a very, very big run, and it came to take out all these eyes right here. So we had price around level, currently sitting at about 160 pips in profit, right? So it's a beautiful stop loss and minimal risk, maximum reward. Right, so that's just basically it for USDJPY. Of course, there are some things you're probably going to need to know along the line while price is approaching some key levels. All right, which I also uh, take note of, which basically I call the session Asian lows. You see it on my charts often, Asian lows. London liquidity sweep, New York likes. All right, so let me show you that of USDJPY on my charts. This is my charts, and you can see that was the trade, and it was a 2 hours re-entry. Right. Okay, yeah, this was the trade right here. I even can't remember where is this. Okay, this was after the UTAD. Okay, after the UTAD, yeah, there was the re-entry. Yeah, the re-entry at the LPSY, of course, yeah. Let's see how price came into that stational candle as well and sold off. Then another re-entry. So basically now we're currently sitting at resistance. You can see I marked this out right here. We're going to sit at resistance. So we want to see how price is going to play out around this level. Okay. And for those people that uses harmonics, all right, for the harmonics guys, you're going to agree with me this is a bearish. All right, you're going to agree with me this is a bearish deep crab, and 1618 should be our D leg, right? So the bearish deep crab 886, yeah, everything all aligned perfectly. So that's why I dropped this line 110.820 right there. So but we're not just taking the short entry right there because we're sitting at liquidity pool, of course. So we want to see how price plays out. We're going to go to the lower time frame, see break of structure, and see maybe we're going to have some Wyckoff kind of pattern forming, and we can probably look to catch a possible trade to around this zone, of course, around the zone right there. So that's okay. So I'm gonna look at price coming to this level possibly before we have the run through that resistance I marked out. So I talked about this earlier on daily time frame. That price, looks like we're gonna break and continue to the upside. But then before we have price moving to the upside, we are always going to have retracement, and you can always catch the retracement as well because in each retracement, it's still going to give us decent profit, of course. So possibly if we have a possible trade, we have 100 pips. to the downside even before the rally again. So that's that for USDJPY, right? I hope that was clear. So I quickly want to talk about Euro as well before I go, and maybe Bitcoin, maybe. All right. So this Euro basically you can see our magnet level as well. Price has come to liquidity zone, waiting the liquidity right there. And remember what I said about liquidity, price runs through liquidity, right? So we want to see price run through that level at the long run. So it's a magnet level and price is going to head towards there as uh sooner or later basically. So basically right now we're on euro we can see structure to downside. We haven't broken structure yet, so until then we are still bearish. That is what you need to understand. Like most people just feel like, oh, I support a resistance or buying. You need to understand market structure. You need to understand where price is at that moment and what price is doing. Is it bearish? Is it bullish? Is it bearish? Then you want to look for short entries. Is it bullish? You want to look for long entries, of course. So, but then we're now using the institutional mindset to catch these entries, right? And we're maximizing the entry. You can see our liquidity right here got rounded off. And as well, if you this particular Euro USD, I really did a lot of, should I call it, games around it, because on the chat on no, no, on Instagram, yeah, on Instagram stories, if you've been following my Instagram stories, if you can tell Instagram stories, I've been dropping a lot of Euro USD trade ideas and everything about it on the story. So if you're not following, just go to the Pip Cartel on Instagram or follow. Then always watch out for the stories, and a lot of ideas are actually dropped there. A lot of questions and answers and stuff like that. So I've updated this all through last week. All right, all through last week I've updated this liquidity right here and our price played out. You can see the mitigator of this 5 minutes cartel candle mitigated. Goes 5 minutes, right? That's 5 minutes, sorry. 5 minutes, yeah. So we can see our price came into 5 minutes institutional candle right there. All right, nice one. Beautiful snipe. Before the FOMC, this was before FOMC. I can see it gave us that run. You can see how price does this liquidity thing. Like you need to understand liquidity. If you don't understand liquidity and you're trading, I'm sorry, you do yourself more harm than good actually. So our price sniped 5 minutes and took out this liquidity right here before the FOMC. You can see went straight into liquidity, took out the took that out. Then the FOMC came around evening 7 p.m. right? Yeah, and we had the run to the upside, taking out this high as well. So after that on Friday, we also have this, which actually is a new supply zone, of course. Time won't even permit you to go into much more details on this. We can see how this got filled up again, giving us about where, giving us about to the downside before uh, this whole move retracement to the upside again. So basically, that's just that. So you need to just follow the page on Instagram and watch out for the stories. I drop a lot of interesting things you are gonna love on the stories. That are very interactive actually on Instagram stories. Deep Patel, and also on the channel, Telegram channel. You should try and be more active. I've been recently dropping interesting stuff as well, which you can also learn from. So for euros, basically, I would be looking at price to come into this level 1.16950 and possibly taking out this old liquidity right here at 1.168. So whichever as well, I'm not just trading off these levels, all right? You want to see how price reacts towards these levels, and if you have a beautiful price action towards that level, then you can look for long entries. or price to come down to this level, which will give me a better entry and a better reason to long trade. And basically, we are still in a downtrend. Don't forget about that. Still a downtrend until we break structure. You can see this recent low, creating this high and creating this new low, and this is a lower low. So basically, we should still see possibly to the downside price come to this level to give us the time won't permit me to talk about a lot of things tonight. Sorry, but I hope you can just grab a few things you can. All right. So with my okay, so we can probably see something like this. No, I'm not looking for arrow. What is this guy? Um, this stuff is covering it, so I need to just pick it from here. Uh, where is it? Oh god. Okay, I think it's because of the charts. You're not post. You are not posting a lot on Telegram. Let only traders only trade after execution. Oh right. Um, yeah, basically that's because I do most of my share most of my ideas with my students. So about try and do more posting. I won't time will really permit me to take a lot of questions, but then you can always forward the questions on the Telegram channel, on the Telegram groups, and I will also attend to your questions on that. So uh yeah, finally this is up. So this is what I'm saying. Price will come like this and give us this W pattern like this, or come down like this, up and come to take out this and give us W pattern like this. So whichever one, I hope you guys got that. Okay, this is scenario one, and this is scenario two, down, up, and taking the low, right, before it goes up. So whichever one, basically euro is most likely gonna change trend, right, from this bearish trend very soon. So until then, we just have to trade what we see. Remember, price is uh reactive and not predictive, right? So you just react to whatever you see. So that's just it. That's my time, guys. I sorry I can't take questions, but then okay. If you have questions, I have about 2 minutes, so let me go. Let me go. If you have questions, quickly drop it on the chat, and if I can answer, or if you have something you want me to look at, I have just 2 minutes actually. So if you want me to look at maybe a currency pair or anything, just drop it on the chat, then I can quickly go over it quickly in 2 minutes. All right, you're welcome. Okay, the recordings. Okay, okay. I'll try and do that. Or probably I'll just send it to the YouTube channel, then you can watch on YouTube. So if you're watching this on YouTube, that's if I finally decide to drop it on YouTube, then do like the video and share with your friends, of course. Right? Is it possible to live on FX alone? No, not on Forex alone. I said earlier, maybe you didn't join earlier. You get all these things on either Forex, crypto indices, whatever, even on what's it called, on um volatility index and all those guys, step index and the likes. You get all this. So what is the chart? You need to understand market structure is always going to be key. Okay, you need to understand structure, and same thing is still what you're going to be seeing over and over again, whatever it is, even in Bitcoin. Let me quickly go to Bitcoin chart before our time goes off. So let me see any other question. Can you mentor us? Yeah, I can. You have to take the course anyway. Uh, trading style. Thank you. Trading. I mean, can you live on it? Of course, you can live on trading if you're dedicated and you really want it. You can. Of course, I have a lot of myself. I'm living on trading. I don't have a 9 to 5 I work, but I have other businesses anyway. But I live on trading. So this is Bitcoin. You can see market structure. Of course, takes over. Of course, and we're actually in an uptrend, kind of, after this retracement, because general overall was in an uptrend. So that's structure for you on Bitcoin, and I marked it out this level, and you can see our price came to this level and we're looking like it's rallying. All right, so that's just my time, guys. If you have any other questions, just drop it on the chat, Telegram. I'll respond to it. I have less than 1 minute, and until next time, I wish you guys happy trading.